Hi, I'm Pattu from freefincal. Today let's talk about if a daily SIP would offer any kind of benefit over the usual monthly SIP, or rather, if frequent buying would average better than infrequent buying, less frequent buying, and so on. This is something experienced investors would know intuitively by just being in the market for a while, but new investors always have this question. So let's try and approach this in a slightly different angle, and we have some interesting results in this. Before we begin, I want to say thank you, because today is the 8th birthday of freefincal. The site was started May 2012, and it has now grown to about more than 3 lakh visitors a month, and 4.5 to 5 lakh monthly page views. The YouTube channel, as you can see, is inching slowly towards 28,000 subscribers. I'm very glad the growth has not been huge. As you can see in some YouTube channels, the growth has been tremendous, and then they struggle. But I'm very happy my growth has been steady, consistent, slow. In fact, at some point it even dipped. But I have the right kind of audience, the right kind of viewers. Uh, so I thank you for that. I also thank the non-Tamil speaking audience for their patience and support, because I've been publishing Tamil videos in the mornings, early in the mornings, and the non-Tamil speakers uh, have tolerated this. Of course, the Tamil speakers have supported this tremendously, but I should thank the non-Tamil speaking audience as well. So the site is transitioned from a personal finance blog driven by my own needs. It is now a news source on Google News. It is also transitioned to a research and product development kind of organization, where we have products coming out: mutual fund screeners, robo advisory, stock screeners. I'm also we have a market valuation tool now. I'm also coming up with other uh, ideas, but I just need to find the motivation and time to get them going. In fact, I have my risk analyzer that's supposed to be coming, but anyway, that's not. It's going to take some time. So before we get to this, I have been featured on Live Mint about how the COVID-19 situation has affected my financial independence status and etc. The link is there in today's post. I was earlier featured in March 2019, and this is a follow-up to that. So we're going to look at an investment made in the Nifty 500, and this is an investment that started in January 1999 and continues up to May 2020. So if I look at a daily SIP during that 21 plus year period, we'll have 5,320 transactions, and I'm going to consider 100 rupees per day. And if I consider a monthly SIP, it would be 257 transactions. And if I have to make sure the investment amount is the same, it will be 2,070 rupees per month. The quarterly SIP will have 86 transactions, 6,186 rupees a quarter. The half yearly or biannual SIP would have 43 transactions of 12,372, and annual SIP, that is once a year, is 24,181 rupees each year. And we can also have a biennial SIP, that is once in 2 years. That is, I invest, let's say in January 2000, I will not invest next until January 2002. So that's like once in 2 year SIP. So it's just 11 transaction over this 21 year period, and that's 48,363 rupees once in 2 years. So if I consider the values and XIRRs of the transactions, the daily SIP resulted in a value of 23 lakhs 9,095, XIRR of 12.13%. The monthly SIP 23 lakhs 12,214 rupees, XIRR of 12.15%. Quarterly SIP 23 lakhs 32,537 rupees, XIRR of 12.17%. The half yearly SIP 23 lakhs 60,460 rupees, 12.15%. The annual SIP is 23 lakhs 45,786%, and that's 86 rupees, sorry, 23 lakhs 45,786 and an XIRR of 12%, 12.03%. So it's pretty much the same with some differences, but the biennial SIP, the once in 2 year SIP, is 27 lakhs 27,515 rupees, and the XIRR is 12.72%. This is most amusing, and if you notice, I'm actually front ending the transaction. For example, if I'm doing in the daily SIP, I'm doing a SIP of 100 rupees each month. But when I do a monthly SIP, so let's say I have a month and there's 30 days, and I'm doing daily 100 rupee transaction, and therefore over a month it will be 3,000 rupees. But what I'm doing is, in a monthly SIP, I'm front ending it. I'm investing the entire 3,000, or actually it's 2,070, but I'm just saying for the sake of argument, I'm transacting or buying units for the entire month right at the first of the month itself. So I'm front ending it. If for a daily SIP of 100 rupees, the monthly amount of 2,070 is a lump sum. So I'm buying the lump sum to in the front of the month. Similarly, for each quarter, at the start of the quarter, I'm buying 6,000 rupees. 6,000 rupees is a lump sum for 100 rupee daily SIP transaction. Because of this front ending, I am buying more units at an earlier time, and therefore, when the market, suppose it goes up, then my value will also grow up a little more. And that is the reason why, if you notice, from daily to monthly, monthly to quarterly, quarterly to half yearly, and annually. Annually, maybe it's a little less, but you can see it's gradually the valuation is slowly increasing a little bit, and it's significantly more for the once in 2 year of the biennial SIP, which is like 27 lakhs, which is like 4 lakhs more, because you're buying only once in 2 years, but you're front ending the entire transaction amount initially, and that's like investing a lump sum. And during a bull market, the lump sum typically does better, because you have invested most of the amount initially instead of averaging it out across the bull market. And so you can see the growth here, and you can see the once a year, once in 6 months, quarterly, monthly, daily, all those colored lines are basically on top of each other. You just see those white dots. That's the once in 2 year transaction. The line joining the white dots is not correct. That's just an illustrative line. I will show you the actual growth, and that actually you can see it straight away. That actual growth is seen here. So I have now compared a daily SIP, which is the green line, and the once in 2 year SIP with when the transactions were actually made. The dots show the transaction dates, and you can see, since we are buying more units upfront, that's why it grows more. The value increases more when the market moves up, and that's why you can see that. And it's also it doesn't crash too much, but it just crashes just the amount, just the same amount. But you're still left with more number of units and more valuation, and because of that, the once in 2 years SIP does better. Who would have thunk that? I mean, that's not intuitive at all. So the simple point is that please don't worry about, again, the same thing I've been saying for a long time. Don't worry about averaging. There's no such thing as averaging benefit in SIP. What matters is how much capital is actually put into the market and facing the ups and downs of the entire market. So you're not going to get anything better by averaging daily, or averaging monthly, or averaging quarterly. You are not going to get anything different or anything better. So the message, if anything, is don't worry about averaging benefit in SIP. There's nothing. Just invest as often as possible, and if possible, invest as much more at an earlier date. When you have time, you invest more. Then if there is a bull run, then maybe you will be ending up with more value, although the returns are not different. See, if you notice, the once in 2 year SIP, the biennial SIP has got 4 lakhs more, but the return is only about 0.5% more. So don't worry about this annualized return business. You have 4 lakhs more in hand. That's what makes a difference. So that's what I wanted to say. Thank you once again for your support. Catch you later. Bye-bye.